Hello everyone, I'm Justin Smith, or Smitty as most people call me, and I am extremely grateful and excited to be talking to you today a little bit about Blue Bison Ventures, but most importantly about our latest investment opportunity that we're working on. For those of you who aren't familiar with us yet, we focus on value-add investment strategies specifically around multifamily complexes and multifamily commercial property. So as we move on, now before we talk about any investments, before we talk about the investment we have today, we do have the typical disclosures that we have to discuss. And so while the legalese is all here and you will get this information via hard copy as well, these are obviously forward-looking statements. These are projections. They can potentially be wrong. No financial return is assured, and there's risk factors and everything. I'm doing the quick version for you. The legal information will be in there, but we do have to talk about this before we jump into the property, which we are excited to talk about. So here at Blue Bison Ventures, we are a real estate investment company, privately held, focused on value-add, multifamily, commercial investing. So here at Blue Bison, our focus is to deliver a few things to our investors. Primarily, we want to have wonderful, truly passive, hands-off cash flow for our investors, and as well as lucrative deal-end payouts. This will come in the form of either cash-out refis or selling the entire property when it's time. Working with Blue Bison Ventures, we have what we like to call the Blue Bison bonus. And this is where we really feel like we separate ourselves from other players in the marketplace. And what we do, the first one is there are no fees. We have no hidden fees or fees that are associated with the deal where we line our pockets before you, the investor, is able to line yours. So you'll see in other opportunities, you may hear of things like acquisition fees, disposition fees. There's also money management fees. All these other things add up to take profit away from you, the investor, and really are unnecessary, in my view, for this type of investing. Now, our focus then is we make money after you, the investor, has made money. And that leads me to the second thing, which is we invest with you. So I personally will invest a significant amount of my own wealth into each one of the properties that we talk about. I'm especially happy about and excited about the property we're talking about today, and we'll be joining alongside with you. So our money will be made only after investors like yourself have received your money, and there are no hidden fees which we are trying to extract out of these deals before delivering value to you, the investor. So before we jump into the property, which I promise is coming here shortly, very excited to talk about it, I do want to walk through our typical investment life cycle just to give you an idea of what we're trying to accomplish here at Blue Bison. So obviously after we acquire the property, we're going to look to make renovations. Now this may be renovating every unit on property, this may be some slight cosmetic adjustments, it may be a more deep whole rehab type of an approach, or maybe a portion of the units. But once we do that, the goal is really to raise rents. Now, as we raise rents, what we're going to do is be raising the NOI on the property, net operating income, which is basically your income, which is your rents and other charges that you have, less your expenses, not counting any financing expenses. So after we stabilize that, we will be distributing cash flow. We'll distribute cash flow usually right out of the gate, depending on which the opportunity is. In this case today, we will talk about those returns will be happening pretty quickly. And then we hold the property. So we're going to continue to hold. We're going to continue to allow rents to increase. We're going to continue to add productivity and operational improvements. And at some point, we will sell the property, and then we distribute those profits to you, the investors, as well. So there, as we move into the next slide here, we'll talk about how you are making money and when you're making money. So just want to talk about cash flow distribution real quick and how you, the investor, and me as a co-investor with you, we look to make money on these opportunities. So we have our annual cash flow, and what will happen is investors will receive preferred return checks, usually dispersed in quarterly payments, which will be in this case as well. And then we'll distribute profits to investors when the property is sold or there's a cash out refinance. So that's the two-way, one of quarterly checks along the way, and then a nice big one, hopefully towards the end of, at the sale of the property. Okay, so this is it. Sugar Creek Apartments. It is my privilege and with great excitement that we get to talk to you guys today a little bit about Sugar Creek Apartments. So and we're going to go through the property details here. We may cut and give you some more visual. We have lots of video and photographs of the property, and we'll talk about it as we go here. So Sugar Creek is located in Independence, Missouri. So it's just less than 20 minutes outside of Kansas City, which is a great area that we'll talk a little bit more about. The purchase price is $10.1 million. It's about $66,000 per unit. We're looking at a definite value add opportunity. We have 153 units. It's actually distributed between 7 different buildings, so we'll talk more about that. The current occupancy is high at 98%, which is great. There are opportunities though that we'll talk about here. As far as the unit mix of the property, you'll see that there are 47 studio apartments, which are in extremely high demand, especially in this part of the city. 73 one-bed, one-bath, and 33 two-bed, one-bath. The utilities, tenants currently pay electric as part of their electricity as part of their rent, and owners are currently paying water and trash. And the exit strategy here is really, we're going to dive more into this, but as opposed to going in and actually improving every single unit, we're going to talk about a strategy that we have to go in and improve a percentage of the units to demonstrate that there is a huge upside here at the property, and then we'll use that as leverage to then sell at a lucrative price point moving forward. So we'll talk about that, and the goal here is to sell within 3 to 5 years. Okay, and we'll be jumping into some aerial footage, and we'll have some different pictures for you guys, but you can see here that the complex is situated in a really interesting area. Independence is definitely again, it's a suburb of Kansas City, and there are parts of it that, it's close to a lot of shopping, it's close to a lot of convenience. At the same time, the property is in a very secluded area. So what's nice about it is you can see that between the 7 different buildings, it's safe, it's clean, it's in an area that's secluded from any of the hustle and bustle that may be there around. So the tenants here really love that they get that feeling of privacy and security, and really enjoy kind of even the community that gets built around it. All right, so just a quick overview of the location here in Independence. So the Sugar Creek Apartments are surrounded by an extensive highway system, excellent access to everything that residents would ever want. So that's great for commuting, it's great for work, it's great for accessibility. Close to the airport, close to downtown, and many notable retail destinations. And you can see here Sugar Creek, but we have many big employers that are nearby that are on here. And again, you'll get the hard copy of this and a lot of different things that you can look at. But there's some great benefits to the location. In addition to having access to all of these conveniences and all of the work nearby, it's also in this nice, quiet, secluded area. Okay, in addition, you can see that we always like to see growth. You want to get a good deal on a property, and I might actually take a minute to talk about this property. This was a connection that I had made. We've been focusing on the state of Missouri and Kansas City in particular because of the growth of the area. It doesn't seem to have massive spikes. It just continues to be a gradual uphill growth, and both economically and population growth, which is great. I had built a close relationship with the broker who was going to be listing this, and was able to get a heads up before it was made widely available. And so we had quite a bit of a head start to put together an offer and to get aggressive with the sellers and get this building, or get these units, get this complex under contract before the open time that they had set for all offers to come in. So we actually were able to beat all other investors to the punch, and I know for a fact that we were able to get it for at least a couple $100,000 less than what some of the offers were going to be. But because we were quick to it and we had those relationships, have an opportunity here to get an even better deal on the property. So we do love the area. As I said, many great employers around, continual growth in the area for the last decade especially. And again, the population is nice. We have nice income, we have a good mix of employment and growth and all those things. So really, Independence happens to be near Kansas City and has all those things that we look for in an opportunity. All right, so I want to give a quick look at sales and rent comparables and talk a little bit as we move into the strategy here on the property. So I have Sugar Creek here on the top, and then we have some comparables in the area that we're looking at. So a few of them in here. I do want to point out the closest comparable, it's almost identical in a lot of ways, is this Cimarron. You see it was built around the same a year before, 192 units. The unit sizes are comparable. But you can see the huge disparity here. So Cimarron is selling, these are their one bed, one bath. They are going for $794, where here at Sugar Creek we're going at $530. Now, I'm not saying that our goal is to sell or to get the rents up to that, but we have a strategy where we can actually find a happy medium between there, because they really do compete, they're near each other, and we have a great strategy in place. And actually, when I talk about who is managing the property, the management company is actually the same management company that did this turnaround at Cimarron. And so we're going to work closely with them to actually kind of gauge and play the market the right way to maximize rents even more, and kind of play that sweet spot right below where this Cimarron is going at, but still providing a great value for the tenants. We do have some comps here on sales in the area, and you can see that the price per unit is for most, and the average for the area for all the comps I believe we went through 2018 was around $89,000 per unit. We're coming in well below that, which is exciting and definitely is opportunity for us. We have a couple comps here on here that have some sales have happened throughout the years for you to look at, but we feel very confident and excited about the price point at which we're getting in at, and excited about the upside potential here. Okay, so I'm really excited to talk to you about our strategy here on this complex, because this is really what I think makes this really a really unique and special opportunity. So there's a lot of text here on the slide, and you'll get the hard copy of this, so I'm going to just talk through this. There's just a great opportunity. We have 3 units that are currently out of commission. So they 2 of them had some water damage from a leak above them, and the water just got everywhere. They have to be completely torn out and redone, as well as a 3rd unit that had a small kitchen fire. No major damage, but the smoke really destroyed the interior of that unit. So we're going to take these 3 units, and we are going to have the luxury and the advantage of being able to test the market with making some renovations in them. So we're going to go in and we're going to make some improvements, like I said, with this management company that's worked on that other property that's had those huge increases in rent, over $200 per unit, which can make a difference of millions of dollars in increase of value of the property. What we're going to do is take these 3 units, and we're going to focus really on improving them with as low a cost as possible, but making them nicer than what the current units are, and playing around and seeing how high we can get the rent for the investment it put into these 3 units. And so we're going to have a great opportunity to test the market and see where these ranges are, what we can rent them out at, and what the additional investment in those units is going to need to be. Once we have that data, what we're going to do is then take that strategy. Now that we have that, we know for the area, we'll know for sure how we can now adjust the data. We're going to go and take a percentage of the units in the property and make those same changes, and then increase the rent for those apartments. Now, this is where we're going to say it's going to be somewhere between 20 to 40% of the units, depending on how much we need to invest in the units to raise the rents and where that trade-off is going to be. That's perfectly fine, even if it's on the lower end, because then the goal will be to demonstrate that the rents can be raised, to show exactly what those costs are to make those changes, and then when we go to sell the property, and like I said, we're focusing somewhere around 3 to 5 years, we can then take that pitch and show it to other investors and show them that there's still a lot of meat left on the bone, that there's a huge investment opportunity for them, and that allows us to sell the property at an even higher premium, because that pro forma will show what the upside potential of the property is. So we are ecstatic about this opportunity. We have these 3 units to play around with. We're going to go then take a cohort of the units there. We'll know which mix is going to be best. It's going to be a wonderful opportunity, again, to just demonstrate what the improvements can be made, all at the same time by improving those units and gathering in that extra rent. So with all of these things going on, we're increasing the rents, and we're identifying where we can have this additional value add. It really is going to be a win-win. more income for the property, as well as identifying the true upside for the property while we increase the value. All right, so the third part here of our plan really is to just maximize operational efficiency. There are definitely some things that we can do in the property with the property management just to make sure that we're getting maximum value, that we're not wasting any expenses, and that we're extracting total value from the property while still providing a great living experience for our tenants. All right, so again, you're going to have these details for those that want the details and want to dive in. We do have everything here for you. You can look at this much closer. You can see here we've gone through, we have the expenses throughout, the current expenses on the property, and the adjusted net operating income is sitting about $608,000 a year. And you can see that the current expenses are currently totaling 43.4%, and that's where we talked about that operational efficiency. We like to see that get lower, ideally right around 40%, so there's definitely some more opportunity there that we look to focus on. Okay, and to that point, you can see here as you take a look at the pro forma here for year 5, our goal is really to get down to right here below 39.2% is again, these are just projections and our estimates and our goals right now. I can say that we've been very meticulous in going through the current expenses, going through what maybe they're missing, what maybe is not on there, and making sure that we're operating this property and that we're making appropriate estimates, because really our goal is, and while we can't ever perfectly forecast these things, we would rather under-promise and over-deliver. So we've been conservative and hoping that we can do even better than some of these estimates that we've made. And so please go and take a look. You can see we have a goal to get that NOI up to $805,000 by year 5 in this case. Again, our time frame for selling is somewhere between years 3 and 5 while distributing cash flows in the interim. And again, so we do have our 5-year projections here. This is overall for the property. This is where we start to talk about returns. So this is always the exciting part for you, the investor. Wanted to make sure that you were armed with the information on the property, understood what you were investing in, and why I'm excited about it, why we're excited about it. But now we can talk about those financial returns, which is what we're all excited about. So you can see here a couple interesting things. So we break down, again, first of all, the cash flow on the opportunity. This goes through all 5 years, and we're going to give a hypothetical here on an investment, so you can see what that is broken down. But you can see here that the ROI is expected to be, again, the projection here is 120.38%. So, you know, much better than doubling your money. We have a 9.67 annual cash-on-cash return. I'll start that over. So we're excited. You can see here that just the cash-on-cash return on a preferred distribution is estimated right now around 9.67%. And then when you factor in the sale of the property at the end up averaging 24.8% annual return on the money, which is just phenomenal, something we're super excited about. Personally, I am as well. This is how, you know, that real generational wealth can be built, and we're just so excited about this opportunity. Okay, so now what we want to talk about is our investor structure, how we're looking at breaking that down, and how those returns can look for you and how we're expecting to do that. So how much capital will be needed, where will the capital raise be going to, and how you, the investor, is going to be paid, which, again, very important. So first of all, investment structure and use of capital. So you can see here that we were going to have a down payment of $3.23 million, and that's to cover the loan that we have, which is a phenomenal loan. I haven't spoken about that yet, but we're very excited about this. We have initial approval on a Freddie Mac loan with absolutely rock bottom interest rates. They love the property, they love the location as well. That's how they judge these assets. And so a lot of optimism there. We're going to have I believe a 69% or 71% loan to value. So we have some nice cushion there as well, and we're very excited about that. Closing costs and legal, well, estimated right now at about $300,000. And then we have our CapEx and renovations that we talked about, experimenting on those units, going in and fixing those 3, and then spreading that between a subset of the units in the complex from there. Estimating that at about $380,000 right now. and then working capital of $50,000. Now the wonderful thing is that as we come in and we've identified efficiencies, maybe their closing costs aren't as high, or we identify more efficiencies, all of this investment money is going into the property, and we will make sure that we allocate that capital in a way that brings the highest ROIs for our investors. And we always look to be as cost efficient as possible, and then that will only maximize our returns and disbursements in the future. So the total amount raised is 3.965 million. You'll see on the PPM, which you'll receive if you are interested in investing. We'll get you those details. It's the larger legal doc with all the information in it. We are allowing ourselves to raise up to 4.5 million on this property, should we choose to have a little bit extra cushion, but at a minimum raising that 3.9 million, which we are excited about, and will be on a first come, first served basis, and we'll talk more about that structure here in a minute. All right, so let's talk about the investor structure. And what we're excited about, first of all, is that the annual cash flow. We are going to be offering, and this is what we're extremely excited about, is a preferred return for you, the investor, at 8% a year. So then with additional cash flow, because we do expect in our forecasting, in our estimates here, that this will be cash flowing more than 8%, we'll be doing a 65-35 split. So 65% of everything above the 8% will also be going back to you, the investor, and with the 35% going to the sponsor. And then when it comes to distributing profits to investors from the sale, right? So that's the other way that we'll be making money, and that will just be a flat 65-35 split. So that's 65% at sale in addition to the cash flow returns that you receive up to that point. So again, there are no other fees involved. There are no disposition or money management, none of that we're taking money in. It's just strictly this clean cut structure that we're looking at and very excited about. I will say we are doing a minimum $250,000 investment, and our investors must be accredited investors, meaning the definitions can vary, so check with your accountant on that. Typically it's $200,000 in income or $300,000 in joint income with your spouse. So it can either be that on the income side or a net worth of, I believe, $1 million, not counting your primary residence. So check with your accountant on that, but we'll be working with accredited investors, which allows us to actually do some of this marketing and advertising, which may be a little bit easier. And again, yep, the minimum investment at $250,000. All right, so if we want to talk about, again, investor profit projection here and just taking a look at the cash flows and the profit sharing and those types of things, you can see we break down the cash flow here for each of the 5 years, so fluctuating from just under 350 up to just under 400,000 in cash flow. And so the cash flow alone over, again, this is looking at 5 years as we look at that range, just under $2 million in cash flow alone. And cash flow is income less expenses, and that is also including the any debt or financing payments that we're making. So just cash flow off the top after everything that's been discussed. And we're looking at a sale price in year 5 of $15.7 million. That's based off of current market projections and assumptions that we've made, again, fairly conservatively to make sure that we're not overestimating anything to the best of our ability here. Now, we do have the cost of sale and all of these other loan balance, all of those things, but at the end of the day, the 65% profit back to the investor, in addition to the profits from the cash flow, is an additional $2.855 million. So ROI from refi or sale is 72% on that cash. So combined overall deal ROI, just over 120% is what we're going for here, and again, just over 24% average annual cash on cash return, which is, again, I love when we can beat the market. I love when we can deliver something that's really truly hard to find, and also something that we feel really confident about for you, the investors. So very excited. Again, you can see why we're excited about this property. Okay, so I wanted to give a quick hypothetical here of investor returns on an investment made. So we just took $500,000. It's an easy round number, and I'll be able to demonstrate here what that looks like. So starting off here, you can see the cash flow projections for each year at 43, 48, 53, 46, 49. There is some fluctuation here. This is mainly due to the debt adjustment. So we have this beautiful loan that's 3 years interest only. So I have some nice things built in there as we are working to make these improvements we talked about. So that's what the cash flow looks like for each year. Now, what we're looking at here is that at the point of sale, so in that year 5, selling at those projections that we had made, we have here that we'd obviously return that initial investment of $500,000. This cash flow amount adds up to be about $241,000, and again, this is off all those splits. And then right here we have profit from the sale at an additional $360,000. So that's $601,000 on top of the $500,000 returned. That's why down here we have an overall return of $1.1 million. And what's great, as you can see here, is we break down the cash flow projections for you on each year. So year 1, obviously we're making the most improvements. We're expecting around 8.76% and this is again after all those splits and those returns for you, up to 9.66, 10, 9.3, 9.8, and then obviously we'll have the cash flow at the sale, which gives us that great ROI overall on the investment. So very excited about this deal. Should we go in year 3, the numbers aren't too far different. Obviously you just have a few years less of the cash flow coming in, but the sale numbers and the ROI goes down slightly just because there's not as much time between them, but still it's a fantastic deal. And we'll be looking at the market, trying to understand what's happening and making sure that we're maximizing that return for you. So just really quick here on the team, I just want to make sure everybody is up to date. Put my gorgeous face on here when I wore suit jackets. So I'm the founder and principal of Blue Bison Ventures, and while there is a great team of advisors that are extended, I want to talk about a few of the principals. First and foremost being Peter Harris here. Peter Harris is a world-renowned real estate investor, specifically around multifamily investment properties. We've worked hand in hand on this property, and he's really the one that's given a lot of the additional assistance on due diligence, understanding the profitability and really understanding the market and making sure this is the right way to go. So he's been a great resource. He's worked with everybody from professional athletes, co-written books with people like Donald Trump, even written the book on real estate investing for dummies around multifamily. So Peter Harris is just an awesome asset that's part of the team and working very closely with me on this deal. So the property management is this Expo Real Estate Holdings. They're phenomenal. They're the ones that have taken that other property and completely turned it around and turned it into something really phenomenal and raised rents by up to $200 per unit, which is just insane. And so we're really excited to be working with them. A lot of experience in the market, which is key and crucial on this. Had many discussions with them and with their principals, and excited to make moves with them on this property. And lastly, we have Premier Law Group. This is the absolute #1 syndication law group in the nation. If you ask me, they're phenomenal. They have a great team. They have a great founder, Mauricio, that's been all over the press, CNBC, the Real Estate Guys podcast, all of those things. And his team that we're working with is phenomenal on this deal. So we have all of those T's crossed and I's dotted. So that's a high-level team of management and advisory. We have a whole host of contractors and other folks that we'll be working with on the deal, but really feel confident about the team that we built and have put together for this opportunity. Okay, and just a quick acquisition timeline for you so you understand where we are today and where we expect to get to. So the contract was effective as of June 22nd when we got it under contract. Again, that was a few days before they were allowing other investors to put offers in, so we got ahead of the game and beat them to it. So earnest money deposit has been done. I've personally taken that as part of my investment in the property and moving this along. That's completed. We've done a great due diligence and feel really excited about the opportunity. No major issues or anything outstanding like that. Liens on the property, those things. The inspection period's completed. Okay, so with investor money due August 13th, we have a projected close date of no later than September 20th. Obviously we have, just like when you're acquiring any real estate property, we want to make sure all that paperwork gets done, and so it gives us enough leeway to make sure we have all of that squared away. And again, we are very excited about that. And then once we close on the property and we take over ownership, those quarterly distributions will start quickly thereafter, which again is exciting for you, the investor. Now, one thing that we haven't talked about are any tax benefits for you, the investor. Obviously, there are tax benefits. You need to work directly with your accountant on that. But there is depreciation that goes along with this, and then investing in these types of opportunities. So make sure that you understand that. That's an added benefit to this. In addition to that, we just look at this property, and I'm very excited about it, both because I love multifamily commercial real estate. I think it's one of the best hedges that we can have against inflation. Again, these are personal beliefs, but if inflation goes up, we raise rents, right? Rental properties, again, are going to be a hot commodity. As real estate prices are going up, folks are going to be forced to have to look for other means to live in, so we'll be providing a great resource for that. We're in a great market. We are, again, a great property that has huge potential for upside, and just excited about this all the way around. So again, Justin Smith, or Smitty, as most people call me. I'll be sharing my contact details. You'll be working with me directly. I will have a broader team that we'll have access to, and we'll be looking to move really quickly on this. So if you are interested, you all just need to let me know. We'll get you the legal documentation that you can sign, and also the banking information, so we can make sure we get that transfer and get everything taken care of, so we have clear alignment as we move forward towards closing on this officially. Again, we just want to thank you. My name's Justin, or Smitty, as you see here. My contact information is here. Oh, it's actually blurred out, but it's just justin.smith at Blue Bison Ventures. I'll have my cell phone number available to you, 801-872-3130. You can call or text, and we can get everything moving in the right direction. Again, we're going to be looking to raise that money quickly so that we can then move and finalize this property. We're extremely excited about it and the opportunity that's going to give us as investors. And please, again, thank you for your time. Thank you for hearing through this, and we'll look forward to working with you. Thanks.